Hey guys, I reached a new milestone for the first time. I passed the $12,000 mark. Of course, right now we're down, but earlier this week was the first time I had ever ventured out into that area. As you can see, I passed the 12,000 mark for the first time on the 19th here. So let's take a look at my progression and see how I got here. So there were times when I was really excited to put in money and then times when I was reluctant to put in money. Really towards the end of last year in December, that was when I was most scared to put in money. But looking back on it, that was probably the best time to put in money because that's when all the stocks were doing bad. And then they all rebounded very well at the beginning of 2019. So you could have walked away with some great returns, but that's what happens when you get your emotions involved in it. And it's a good rookie mistake that I made in my first year. The good news is that I just finished paying off all my student loans last month. So all that money that I would have spent on payments, now that money can go straight into the portfolio and I'll reach these milestones a lot quicker, and then we'll have even more compounding of growth and dividends, and just excited to see where the portfolio will go in a short amount of time. And, I also paid off my loans at the same age that a lot of people graduate college. So if you're interested in how I did that, please let me know in the comments and I can make a video about it. I've also been doing slightly better than the markets lately. The vast majority of people cannot beat the market. Somewhere over 90% can't. So don't feel discouraged if you can't either. There was plenty of times when I was not even close. Like the market would be doing significantly better, percentage points better than me, and I was wondering what's wrong, but now as I just continue to put more time into it, I've been doing a lot better here. And, just being even within striking distance of the S&P 500 return is pretty impressive. And this is why a lot of people prefer individual stocks over index funds and ETFs. It's so you get this control of where your investments are going. And there's a few of us that could potentially beat the stock market. Of course, this is only a short sample size. My stocks are more defensive. So if I knew we were in more of a growth phase of the stock market and not in this extremely volatility every day, the stock market would have better returns than mine. So the impressive part is if you're able to keep this up for a long period of time, which I'm not sure if I can do, but hey, I got to celebrate these returns when I can. And I once again want to thank everyone for all the support they've shown to the channel. We've had a lot of great discussion in the comments, and also people have been hitting me up on Instagram direct messages about the last video we had on General Electric and any possible fraud that they committed. So if you guys could please hit that like button, it really helps with the YouTube algorithm, and subscribe to the channel if you haven't done so already, and that really helps me out. And today we'll be looking at my stock portfolio live, and then I will also be adding in a new position to the portfolio here. So last day, or just today, it looks like it's been a down day at $180 almost, and the last week been down $172. Last month as a whole down 2.73%. And when we compare this to VOO, this is basically how the stock market has been doing in the last 3 months here. As you can see, VOO is down 3.96, 9.8% in the last month, and I'm down just 2.78%. So let's keep trying to get these great returns going here. So the stock I'll be buying today is a stock I've talked about multiple times in the past, and that is Waste Management. This is a great defensive stock here. It did very well in our last recession. Of course, this only goes back 5 years, but if you look at Waste Management during the 07, 08, 09 years, it didn't go down that much, and that makes sense. This is a company that will continue to operate regardless of what cycle we're in. I mean, we're still going to be producing garbage and trash and waste even in times of recession. We can't really control that. And Waste Management, it provides collection services, it transports waste, and recycles materials to facilities or other disposal sites. Waste Management also owns 437 different subsidiaries, many of which are focused on a greener economy and recycling and reducing pollution. So I don't think we'll see any protesters lining up to protest about Waste Management, unlike other companies, which I will not talk about. But Waste Management has a gross profit margin of 38.7%. This means that for every $1 in sales made, Waste Management keeps about 39 cents of it. And that's pretty impressive. After subtracting the cost of doing business, this is a company that is very careful about how they handle their money and spend their money. It has a trailing 12-month return on equity of 27.7%, which is higher than the industry average of 20%. So this is a good company that has its fundamentals together here. It has a good management team that you can trust to continue to pay its dividends, which are $2.05 a year, which is about 50% of its earnings, and it's raised them for 15 straight years. So let's go ahead and buy some waste management. I'll probably just be averaging into this position. So even if I don't get it at a good price today, maybe I'll get it at a good price next month or the month after that. We'll buy 2 shares on a limit buy here. So if it's trading at 117.15, and we'll just do extended hours, 5 p.m. today. Let's just do 2 shares, 234 in total, and then let's swipe up to submit and let's see if it went through. All right, we already got the 2 shares there. So great position, I think. I'll be holding on to it for the long term. Now makes up about 2% of my portfolio, and we'll see how waste management does in the future. Of course, whenever you see a chart like this, that's pretty good news. First stock we'll talk about is Equinix. This is one that I moved up to one of the first stocks in the portfolio just because I think people don't see how great of a stock this really is. People are talking more and more about cloud computing, and I think that's a great industry to get into. Only con for this stock is just so expensive, and another share would make up a large percentage of my portfolio. But hey, this is a stock that has been unbelievable in the last 5 years. If you guys don't know what they do, be sure to check them out. It's a lot of cloud computing, and they basically hold kind of those data centers that provide a lot of that infrastructure in businesses in terms of where they store their files. And it's a very international company as well. And also pays a pretty solid dividend yield, about 2.5%. And just very happy with this stock. Then we have Starbucks here. This is a position I am up 53% on. Total return of almost $100 here. Then we have one of my newer positions in Shell. Down a little bit on this overall. Just paid out a dividend though to me, so it's actually not down very much at all. You can get in on this stock at about a 6.7% yield, which is just absolutely insane for a world-class company like Shell. Shell is not an American company. I believe it is in the Netherlands, and it's been around for a long time. It's been consistently paying out dividends, and that's the reason why I bought this stock. Then we have 3M. Looks like this has reached even more 52-week lows here, down to 155. You can get this at a ridiculous starting yield as well. 3M, been doing a lot of research about this company lately. Seems to be impacted a lot by these trade wars that we've been having with China. They actually do 1/3 of their business with China in terms of their revenues. And I'm not surprised that they've been hit hard here with the trade wars. I'm down considerably on this position, but this is a dividend king. It's a position that I think this is only short-term effects, and I think 3M will be able to get back on track here once we hash out these trade war talks. We have Intel down here, 2.99%. It did have a great earnings report in August, and we'll see how the stock fares in the future. Know that they are in a huge market share competition with its rivals, AMD. We have Procter & Gamble at 118 here. Also some pretty ridiculous returns on this one, 52%. Only makes up 3% of my portfolio though. Then we have Boeing. I can't even believe this. The entire stock market is down, and then we have a stock like Boeing, which is usually one of the most declining stocks in my portfolio, and it's actually been up. As you can see, it's been on such a roller coaster here. At one point was in the 320 on August 14th, a little over 10 days ago, and now it's back up to 361. So pretty crazy. Not sure what's going on with Boeing here. Of course, they had a lot of issues in the past. But hey, Boeing continues to pay me a pretty solid dividend. It's been raising its dividend a lot in the past, as you can see here now. I'll just be holding on to Boeing for its great growth in the future that I see it happening, and who doesn't like those dividends as well? We have Southern here, electric utilities company here. In the last 5 years, up 33%. In the last year, it's up 28%. So these are just monstrous numbers for a utilities company. We have United Health here, down considerably in the last 3 months. Really just been, has just been a stock that's just been super volatile. I know it'll be continue to be more and more volatile as we head into this election season, and future of healthcare is really a big question mark. We have AbbVie at $66. You can get this at about a 6.5% dividend yield as well. Pretty crazy. AbbVie, as a company, in addition to Abbott Laboratories, has been paying dividends for 40 plus years. So getting a 6.6% return is pretty impressive. We'll see if AbbVie can continue that even when their patents expire. We have JPMorgan Chase, the largest bank in the United States. Looks like it got hit hard here, down 2%. I expect Bank of America and Wells Fargo to be hit in the same way here, but very safe company there. We have FedEx down to 153, seems to be reaching some new 52-week lows. We have Otter Tails Energy Company there, and then we have Pepsi. I'm surprised to see this in the 130s this week. Hoping to buy more of this whenever it has any sort of dip, really. Great company again. Then we have railroad stocks and CSX, really been hit hard here lately. They had to cut their guidance for the rest of the year, and the stock just absolutely plummeted, down 9% in the last month, 12% in the last year, but still bullish on this stock in the future. It's not a short-term game that I'm looking for, it's long-term. We have Verizon, a very stable company here, makes close to $20 billion in income every year. Then we have Store, a REIT, up on this position as well, 23%, and it pays a pretty nice dividend. And then we have Apple, which earlier today was at the 212, 213 mark, and now it's down to 204. So it always seems to be trading around the $200 mark. Pretty volatile stock here, but I think we all know that Apple is a very safe play, and very comfortable owning this in my portfolio for the foreseeable future. We have Microsoft, just like Apple, great stock to own. Probably the biggest overall return, I think, $202 on Microsoft. We have Medical Properties Trust. I added in 2 new shares, and we'll see how the stock fares for the future. We have Iron Mountain at $31.65. Looks like it's about even for today. And then we have ExxonMobil. Was maybe possibly thinking of buying this on the dip as well at $68.22. Then we have Chubb Insurance at $154. We have MasterCard at $275, close to reaching its 52-week highs again at $283. A stock I'm very bullish about in the future here. Then we have Union Pacific, another railroad company. It looks like it's been hit hard here in the last month. We have Disney at $133, pretty volatile as well. Some of their movies have not done as well as people thought they would, but Disney, pretty confident about them in the future. They basically have somewhat of a monopoly in the media and entertainment business. We have Realty Income here, $73.15. We have Visa, another chip company with MasterCard in terms of credit card processing. Also very bullish on this, as you can see, up 25% in the last year. Then we have Facebook at $2.70, or it's down $2.74 today. I'll probably sell this the next time it reaches the 190 mark. All right, thanks again, everyone, for checking out the video for this week. Let me know what you guys want to see in the future, and be sure to hit that subscribe button.